So if you're watching this video, you've probably decided, okay, I'm going to buy my first house, but now what? Okay, so there's so many pieces to navigate. Do I start and look at homes first, or do I get my financing in place? How do I check my credit scores? Because I know they're going to ask me my credit scores. I know how much money I have and I make. Is it enough? So instead of taking all these guesses and kind of freaking out, why don't you reach out to us? Okay, my name is Dan Frio. I do a report every day and telling people what's going on with mortgage rates and different programs and so forth. But I'm a loan officer licensed in all 50 states as well as Puerto Rico. That's very hard to find in today's market. So that's what I do. I've been doing this for over 35 years. And just recently, we're getting more and more and more calls from people that they're getting duped from their current mortgage company because they were kind of pre-qualified, but they didn't know the rates and they didn't know the fees and so forth. So today's video, I want to educate you on what I would do if I was looking to buy my first house. So the first thing is I got to get pre-qualified. So the question I know that's going to be answered is, what's my credit score? How much money do I make? How much money do I have in the bank? Because those are the biggest three pieces of this puzzle. So you probably know how much money you make. So grab your pay stubs and your W-2s and get those handy. You probably know how much money you got in the bank. So grab a bank statement or whatever assets you have. Keep those handy. And then the last piece of this puzzle is your credit scores. Okay, so that's an anomaly because a lot of people, they'll get their Discover score, they'll get a Credit Sesame or Karma score, they'll get all these scores. I'm going to show you where I would get my credit score to make sure it's factual. So let's dive into this. So what you're seeing right here, this is my website. It's called therateupdate.com. Please visit it. Love to have you there. There's going to be a ton of things up through here. So the first thing I would do before I actually apply for the loan, I want to see, is there any free money out there? Because I keep hearing about all these grants and down payment assistance programs and things like that. So we actually created a button right up there. It says grant. Okay, why we chose the three that you're going to search into, there's no paybacks. It's not a lien on your property. You don't have a monthly payment. It's basically forgivable right when you leave the closing. So how do you figure this out? So you're going to click grant and it's going to send you right over to here. So what I want you to do is start from the top and start answering these questions. I'm going to walk you through because there's one piece in here that's just a little complicated and I'll walk you through that. So in this case, I'm going to do me. I'm just having me a fictitious loan. I'm going to show you my loan products here in a second, but I'm checking to see if there's any grants available for me. I live in Chicago, and so let's check it out. So I'm going to go through this grant finder, and this one I'm applying on my own. So I'm going to click just me. Going to go down through here, and this one says, what is my credit score? I got a 688 credit score. I'm working on it, but it's taking time. I'm a first-time home buyer, so I put in there yes. And then I go down through here, and this is asking me here, let me get me out of the way so you can see the entire screen. So it's going to ask you, do you live in any of these areas? Here's what I would highly suggest you do. Put yes. Unless it's just blatantly not on there. But check and see what happens. So click yes, because I live in Chicago, and then you're going to go down through here. Now this section says verify your census tracking. Look up your current address on the census geocode. And then you're going to click the census geocode, and it's going to pop up this, okay? So that's what it's going to look like. And then you're going to put your address in here where you currently live, and you're going to hit get results. All right. Scroll down to the bottom, and it's the second one from the bottom. You're going to go up through here, and you're going to copy that geocode because it's asking you right through here. You want the census tracking code. It's the GeoID code. So you go to the census tracking code, GeoID code. You copy that, and you put it right into here. All right, so you're scrolling down through here. I'm putting that I make $80,000 a year. I live in Illinois. Cook County is the county that Chicago's in. I'm looking to buy a $300,000 house. I'm a first-time home buyer, so I only need 3% down. Now, do I qualify for any of these grants? You're going to scroll down, and fantastic. I qualify for every one of them. So there's a 1+. This is with Rocket. If you go through us for this program, you can get a lower rate and lower fees, believe it or not, because we're one of Rocket's biggest accounts. So we can offer you this instead of going to Rocket. It's cheaper. This is from multiple banks that we deal with. And then this is one particular bank in the country that we work with as well. So now it's like, okay, I can get $7,500. Well, let's get the application started. So you're going to click it. It's going to send you right through to here. Now, this isn't going to what it's actually going to look like. This is when you complete it. This is what I see on my end. Okay, so we're going to go through this and check out the application. So these are the questions that you're going to answer, because what we need to know is your social security numbers, your birth dates, how much money you make, everything. And it is secure. We got a secure system going on here, so don't worry about any of those pieces of the puzzle. So you're going to finish the application and everything's going to populate right in here. So let's see what consists of the application. You're going to go through here and it's going to ask you what the purchase price is, how much you're looking to put down right through here. It's going to ask you what kind of rates you're going to get and so forth. I would highly suggest if you're putting in a rate to qualify, put in 7%, but we're going to do all this behind the scenes for you. And I'm going to show you how we're actually going to search for mortgage rates throughout the country to help you. So you're going to go down through here and it's going to give you all the information on the property that I'm looking to purchase. All right, you go up through here. The cool part about this is a lot of this piece right here is automatic or automated. It's saying I'm looking for a $300,000 house. I'm putting down, let's go in this case, we're putting down 3%. So we're going to go with the 97% loan to value. It's going to make those adjustments over here. I'm going to change this to a conventional loan. All right. And then it's going to factor in a whole bunch of other things. Some of the factors over here that you got to consider when you're buying your first house, you're obviously going to have the mortgage payment. That is right through here. And that's based on, here, let me save this. That's based on the loan amount that you're seeing here and the interest rate. Okay, so it's going to populate right through here. This is what your payment would be. Now you have to figure out the other components of this part. Homeowners insurance. Well, I highly suggest you call the insurance company that holds your car, maybe motorcycle, boat, whatever, and ask for a bundled a package and see how much it would cost you for your homeowners insurance. We're going to put that number in here right here. Property taxes, they vary all over the country. So there's what we usually do is we'll pull up a Google search to see what the property taxes in this particular area are. And in this particular area, they're 2%. So I put that in and it gives us that. Now this one, because we're not putting down 20%, you need what's called PMI. So we're going to actually factor in that PMI calculation right there. So in this scenario, my whole payment, including everything, would be $2,590. All right. You're going to see a lot of things across the top through here. This also makes the loan officer's job much easier. This one's saying that it's an app intake. So the person just applied for the loan, looking for a 97% loan to value. They're a first-time homebuyer, putting 3% down. Credit scores is 660, I think, in there. I think I had it 680 at the other one, so I can make those adjustments. And then now it's telling us what your debt ratio is. Okay, there's a front and a back. Okay, this front ratio, what you see on DTI, this is your house payment alone, right through here, divided by your income. What this number is over here, this is your house payment plus your other debts that show up on your credit report, divided by your income. So that's why that's different. All right, so that's that part of it. That's basically page one. You're just giving your content. Page two, it's getting a little more nitty gritty. It's giving you the full name, social security number, birth date. That's not my birth date, and so forth. So my email address and all that other stuff. All right. So that's that part of it. I'm telling them where I live, how long I've lived there, if I've rented or did anything there. And then I'm going to be asked multiple questions down through here. Now on the financing side, you're going to put in your job or work information. That's my work information there. Kind of put in how much you have in assets. Remember, we got that bank statement handy, so we're going to put that in here. And now here it comes down to your liabilities. You probably don't know your liabilities, and you don't really have to fill in this section. What I would strongly suggest you do at this point, go over to a website called creditscoresandmore.com, okay? You're going to go down through here, and it's going to say, what is my true credit? This true credit is actually your FICO score, and it's the FICO score that all lenders use when it comes to mortgages. So you're most likely you need all three reports. So I'd highly suggest you pull this one right here, and you're going to hit that. All right. What's going to pop up? It's going to give you your credit report, but it's also going to tell you what your mortgage FICO score is, along with all your other debts. Okay, so now let's flop back over to your application. So now we know what the credit score is. So you can do this. You don't have to do this part of it, but it just helps you prepare with your debts and seeing if you can debt ratio. All right, so we put that information in there. So let's get back to this. So now we have all that information there. Liabilities are in there and everything else. So now what's going to happen is we have to figure out what products we qualify for. So now here's the interesting part. We take all your data and we go over to this system right through here. Okay. What I do is I plug in all the information right over here. Okay. I plug it in, what I'm looking for, loan amount and all that other stuff. I know this doesn't match, but I already had it preset. So this one, I'm going to show you how we scan the country to figure out who's got the best rate out there. Is it my bank or some other bank that I can work with? I'm going to hit the submit button. Bam, here's what happens. It starts giving me rates all over the country. You can see 11 Mortgage, wholesale, Florida Capital, wholesale, Freedom Mortgage, wholesale, Lone Stream, wholesale, New Res, wholesale, and the list goes on and on and on. One thing you'll notice here is they all say wholesale. Okay, you can't get access to these programs like I do. We get discounted rates, we get special programs with these banks and everything else. But what this one's telling me is, based on the criteria that I have in my application, right now 11 Mortgage wholesale has the best rate in town. The rate is 6.75%. And I'm actually going to get a rebate back of $713. If you have the same criteria, and let's say, for example, you called, well, let's see what Rockets is in here. You called Rocket. Rockets, you would have the 675 rate, but instead of getting that rebate, $700 in credits back, you would have to pay $1,000. So there's almost a $2,000 swing, the same program, the same everything, just using a different lender. Okay, so this is how we scan the whole country, basically, to find out who's got the best rates out there for us. Okay, so then we take that data and we say, okay, in this case, I can get 6.75. We go back over to here, we plug in the data, 6.75, and you're going to see at the top here, right up through here, this is going to change. So let's see what it changes to. All right, we're still within parameters. On a conventional loan that we have here, you have to keep this back end number under 50%. Okay, so I'm going to save my changes. Now here's where the magic starts to work. Okay, we're going to go down through here. Now we have all the information. We pulled your credit because we're going to do that through the system, but you already did it through my FICO, so you know what your creditors are. When you know what your credit scores are and who your creditors are, now the magic. We click down to the bottom. Now what we do at this point, we're going to run your loan through two entities. Those entities are Fannie Mae and Freddie Mac. It doesn't matter if you know who they are. They probably approve 90% of the loans in the country when it comes to mortgages. Okay, we all use them. It's me, Rocket Mortgage, 11 Mortgage, Guaranteed Rate, Citibank. Everybody uses this same system. Okay, so if somebody else got you approved, I'll get you approved. But I bet you they didn't do this. They're not searching the whole country to see who's got the best rate for you. That's what we do for you. So this is then going to tell you, okay, you're approved or you're not approved. If you're not approved, then we start working, see what other programs we might be able to fit you into. Maybe we can go with FHA, VA, something like that, to try to help you get pre-approved or pre-qualified. That's the process. Okay, so the nice thing about this though now is then we also have this. Now I lost 2 loans this week. 2 loans because somebody else had lower closing costs than me. So let me explain this to you. Now, this is where everybody's getting duped. All right. So when it comes down to closing costs, in most cases, our origination fee on my side is 0. We don't charge you anything. There's no origination fees, underwriting fees. There's nothing. All right. So now here's the interesting point. I'm going to get my head out of the way because this is really important. These things right through here, we kind of manage these. That says, like in here, there's a couple tax transfers things. I'm going to get rid of those and everything else. But now here's where things get kind of off the charts. These things right through here, you're going to have closing costs probably of $4,000, $5,000, $6,000. Okay, on top of, we're not charging you anything, but these are title fees and other fees. These are not, unless you're using the exact title company that's being quoted on the initial disclosures. If you're using those, your numbers have to be accurate. But most times we don't even know who the title company is. We don't know who the attorneys are or anything at this point. So we don't really know these things. So what a lot of lenders do, they're going in here and they're underestimating all this stuff. So they're going to say, okay, this one's going to be $100 because my borrowers, they're not going to know the difference on this. This is going to make me look really good. So I'm going to put every one of these in at $100, save it. I'm going to go down through here and manipulate some more numbers. Through here, let's say this one is going to be, and it's just a bunch of manipulations. Okay. But here's what we do. I don't want you to be fooled. I don't want you to, I don't want to come out of the gate saying, okay, you only need $16,000 to close. Okay. Here's what we do. We have this system built in. It's called Smart Fees. We click that. All right. What it's doing now is it's scanning that county, that state, that city to find title companies in that area, the most relevant ones that use. So this is now the title companies that it's saying this is probably the average of the area. So I'm going to import all those costs over. Let's see what happens to this 16,000. It went to 22,000. Okay. So these are real numbers. You remember it was 16,000. I was just making up stuff. Well, unfortunately, that's what happened to multiple of my borrowers this week is they got quotes like this from other lenders and they're like, Dan, you're $2,000, $3,000, $4,000 more than they are. And I'm like, you don't understand how this works. Those fees, no matter what lender you go to, are going to be the same to the penny. Because what happens in this equation, the title fees, most of the time the seller's attorneys are going to handle all the title pieces of this puzzle. And many of you might call it escrow. Okay, we don't know what their fees are when we start the application phase of this. You probably don't even know what your homeowner's insurance is going to be. That's why there's a lot of missing pieces of this puzzle. But I tried to explain to people saying, my numbers are as close as they're possibly going to be. Let's say, for example, I come back and said, well, initially you needed $16,000 to close. And then the day before closing, I come back and say, sorry, you need 22. Okay, 22. That's a big difference. Okay, so that's what's going to happen to those borrowers that took those other loan estimates that were not accurate, and they're going to find out at the last minute they owe much more than they anticipated. I would rather be on the other side. I'd rather say you need 22,000, and then at the closing you might need 18, because these numbers are not accurate at this time. Okay, because we don't know what title company is being used. So that's the process. So now you get get everything through. You got pre-qualified, pre-approved. I send you out a pre-approval letter. We put in your agent's information into all this, and you're good to go. We'll send you out that. We would love to talk with your realtor, because they probably have some questions about you and the financial abilities. How much can you really go up to? Because remember I said in this case, you can go to a debt ratio on the back end here up to 50%. So in this case, I can say, okay, I got approved at that, but I can't find a house for 300. So how about 325? And we could do this right on the fly. So I can go 325, the debt ratio's there, good. Let me save this. Let me go back over to this tab right through here real quick to make sure it does get approved. So I'm gonna run you back through Fannie Mae and Freddie Mac real fast. Gonna click it. It'll be a matter of 30, 40, 50 seconds. It'll say, you're approved, and I'll shoot you out a brand new pre-approval. That's how it works. So now we got you pre-approved, okay? And so this is, again, the area that really sets us apart from the rest. So if I could be of any help to you, if you're looking to kick the tires right now and you're like, I'd love to work with you, Dan, on how your transparency, your knowledge of the business, and especially how you guys do this, we would love to work with you. Well, again, how do you find me? Go to therateupdate.com, and it is right there, folks. And all you need to do is click the Apply Now button up there. But don't forget, first step, check out that grant finder, because you might find some free money out there. So that's the video for today. I hope you learned a lot in the mortgage process of this, what we do and what makes us stand out above the rest. So if you like this video and the other videos I do, please don't forget to subscribe down below. So every time I do post a video, especially like this, that's informative to you, you get an alert at least to see what the topic is. And if you like it, go ahead and view it. So thanks so much for watching, guys. Hopefully we can work with you once you decide that homeownership is in your plans in the future. So God bless. Have a fantastic day. Hope to hear from you. Bye-bye.